we've seen a bit of positivity, and the truth of the matter is we've got the NAC sitting above 3,000 points. Do you think this momentum can be maintained, that we see a bit of positivity going forward? It seems that in the short term, this is the likely scenario to play out.
Absolutely. I think, in our opinion, we think the trend is more or less coming to an end. That the market is actually starting to bottom out. Prices, we expect them to continue recovering, and this is in line with recent indicators. And when you look at short-term interest rates, they've been trending downwards. Inflation has also been trending downwards. The shilling has more or less stabilized, and I think those are generally positive indicators for a recovery of the equities market. So we feel by and large that well, the market is coming from red lights, and it's currently at amber on its way to green. So we think this is actually the beginning of a sustained but a gradual recovery.
Let's delve into some of the stocks. Looking at Safaricom, it seems that all the negativity with regards to the intense competition in that country might start to show a little bit of reprieve towards Safaricom, given the fact that interconnect fees are not going to be slashed anytime soon, which means that Bharti Airtel might lose its competitive edge. Do you think that this is the boost that Safaricom needed?
I think so, because I think when you look at the dynamics around mobile telephony, Safaricom still by and large enjoys a very, very big loyalty amongst its customers. And the price wars that we saw last year, in as much as customers are price sensitive, the bulk of the people who are joining Airtel or Bharti Airtel for that matter were actually retaining their Safaricom lines as well to enjoy the call rates within the Airtel network. So I think moving forward, looking at the dynamics right now, Safaricom is definitely going to continue maintaining its market share, and more importantly, its profitability. And the picture, I think, gets even more interesting when you look at M-Pesa, the mobile transfer service, which is growing by leaps and bounds every month according to results that are coming out, in addition also to its data business line. So I think when you look at this, the combination of all these events, they point out to a much stronger, more robust company going forward.
What is your price target on Safaricom?
I would put it at, currently looking at the prospects, I would probably look at it in the range of 4 shillings to 4 shillings and 50 cents within a one year period.
Let's also just take a look at the banking sector. There's been quite a lot of talk with regards to potential corporate action that is going to be occurring. How would you play the overall banking sector? Do you think that it is now time to expose yourself?
Banks, I think we expect their performance to be more or less, okay as far as last year's results are concerned. But perhaps we might not see the big leaps that we saw in the 2011 financial year in terms of the dynamics that were at play last year. There was a slowdown in credit creation towards the end of the year, so that might have an impact on their overall performance. But by and large, I think looking at the rest of the numbers, especially their non-funded income, and even within certain categories of their loan portfolio, we expect their performance to still keep up. Perhaps some of them are likely to be in the double-digit range, although not in the steep double-digit range. But I think there are challenges moving forward, and I think at the bottom of those challenges, at the top of those challenges, is intention by Parliament to put a cap on lending rates, and it's not so clear right now, how that's going to play out.
Just even looking at the interest rate environment, it's not really conducive to create a bigger loan book, given the fact that interest rates are currently sitting at 18%. Let's look at this environment, the overall very tight monetary policy environment, and what kind of hindrance it's going to have on earnings going forward.
I think when you look at the economy where it is right now, there are indicators that credit growth has actually slowed down considerably, especially if you look at the private households category. When you look at the current lending rates, most borrowers feel that they're too high. Throw in the factor that the cost of living has also gone up, so there's less disposable income to fund any borrowing for that matter at the household level. And I think other than for very, in cases of very urgent needs or emergencies for that matter, majority of households are actually likely to continue staying away from credit, and probably also boosting their savings as opposed to going for loans as was happening in the past when interest rates were low. So I think until the monetary policy situation changes, we are likely to see a gradual slowdown in credit expansion. And that is going to have an impact on bank earnings, of course.
Let's shift gears now and perhaps touch on the tea sector, the coffee sector, overall agricultural stocks in Kenya. Given the fact that we're going to experience a 1% increase in exports and imports when it comes to agricultural goods, what kind of impact is this going to have? It seems that on a net basis, those might just cancel each other out.
If you look at our current account situation right now, it's actually, well, it's not in the best of shapes, because when you look at the exports position vis-a-vis the imports position, there's a very, very big disparity. In fact, imports crossed the 1 trillion threshold last year. And I think when you look at also the current account deficit, it's at an all-time high, about 23% of GDP as of November last year. So again, I think there's probably need to look at the export base, so to speak. And I think moving away from the traditional exports, perhaps a more sustainable approach would be to look at export of finished goods, manufactured goods for that matter, whether in the region or whether across Africa. Because again, the tea sector, the coffee sector, and horticulture by and large last year were favored by a weak currency. Now you don't have a weak currency every day, so that cannot be a factor that can be relied upon to strengthen our export capacity. Yeah. So I think there are other factors I think that need to be looked at, in addition to also tempering the importation of what you'd probably consider non-essential items like household furniture and so on, in favor of more productive imports like machinery and the like. So I think we are still at a point where we haven't really quite sorted out our external trade position, and that in the short term might continue being a source of risk in terms of the shilling is concerned.
And of course, Isaac, you hit the nail on the head when you actually spoke of beneficiation and increasing manufactured goods coming out of Africa as a whole. On that note, I thank you very much for your insights.